This is the Marketplace. You're welcome back. Now, World Bank Country Director Henry Kirali has confirmed the IMF is in discussion with Ghana over extension of the fund program. This confirms earlier reports by Joy Business that the government is likely to extend the program beyond the deadline of April 2018. This confirms earlier reports the government will indeed continue with the program. It's, however, not clear for now whether the program will be extended to December next year by the IMF's concerns that Ghana may not be able to implement critical reforms before the original completion date of April 2018. The World Bank Country Director tells Joy Business they are waiting for final agreement between the two parties.
From our perspective, we always look for a sustainable program. And my understanding is that that is indeed the objective for both the government and the IMF, to come to an agreement on a sustainable fiscal framework that can boost growth, that can help Ghana to come out of the current debt levels, and can also help Ghana to fight poverty as it stands. So we are very much in support of an agreement that will be sustainable in the medium term for Ghana, not just for the IMF or the World Bank.
And this agreement is looking at the fact that didn't stay, because I remember when there were meetings there were agreements that things are looking like let's look at extending so that we won't end up having a crash program, and that's what the bank would also respect, right?
We definitely would respect an agreement between the IMF and the government of Ghana. This is the role that the World Bank plays, which is to support the agreements, the IMF program in particular, and we will continue to do so as and when the program is revised and agreed.
Do you think that it might come with any problems for the economy? There are some who also think that there might be some sharp revisions again, and it will come with its own shocks to the economy.
Meanwhile, the World Bank Country Director, Henry Kirali, says the World Bank has withdrawn any form of financial guarantee to private firms venturing into power generation in Ghana.
That the power purchase agreements all have what we call take or pay. You either take the electricity or you pay for it. If you don't take it, you still have to pay for it. So this is the challenge that Ghana is facing. When you have an oversupply of electricity that is not being used, the country still has to pay for it. And that is something that we would try to discourage, and we hope that the government will be able to find ways and means to reduce that risk of paying for electricity that it is not using.
The analogy here about the fish in the soup is that maybe in Ghana, if it's too much, we can export the rest. So what's the big deal, one would ask?
I think the big deal is whether the price that you're exporting is sustainable in the region. The export price in the region is 9 to 11 cents, from our understanding. And the tariff levels in Ghana are more than that, significantly more, from 13 to 16 cents. So if you're going to export, it means that Ghana will have to subsidize some of that export in order to be able to meet the market levels of tariff. So at 9 cents, you would have to subsidize maybe 4 or 5 cents. And this is not good economics for Ghana to be subsidizing electricity being used in other countries. But if the government can find a way to discuss, renegotiate, reschedule, whatever it is that they need to do with the independent power producers in order to reduce the tariff levels, that would be very welcome news.
Away from that, more investors are showing keen interest in partnering government with its one district, one factory policy. That's according to Senior Minister Yao Osafo Mafu. This came to light during the recent non-deal roadshow led by the Vice President, Dr. Mahamudu Bawumia, and the Finance Minister, Ken Ofori-Atta, which took the team to London, New York, and Boston in the United States of America. The senior minister tells Joy Business most of them want to focus on agriculture.
A number of them want to visit Ghana within the next week or two, and that itself is a positive. They ask whether we'll be back by a particular date. Why are you asking? Say, we want to follow up, we want to visit, we want to discuss further, we want to discuss with various sector ministers. So we must go home and send the message to our sector ministers to also be that welcoming, find time and discuss these investment opportunities. I think the signs are extremely positive. They are focusing on agriculture and industry. Our one district, one factory will be hovering around agric and industry, because at the end of the day, raw materials available in every district, about 60% of it will be agricultural. And therefore, if you link it together with agro-business, then you are on the right track.
All right, so this should mean that the government's plan to let private firms lead the implementation of the policy would indeed materialize. According to Trade Minister Alan Kyerematen, government has started reviewing proposals for the program to kickstart. Moving on the marketplace, the National Insurance Commission says all insurance companies in the country have met the new minimum capital requirement by the Commission, except one firm. The NIC says it has ordered the said firm to meet the requirement or face the consequences by the middle of the year. Insurance Commissioner Lydia Laraba-Bawa, speaking with Joy Business, said the industry regulator is working assiduously to strengthen the insurance sector in the country.
The National Insurance Commission, NIC, last year received the minimum capital requirements for insurance and reinsurance companies to 15 and 40 million cedis. Per the new directive, insurance and reinsurance companies are expected to adjust their minimum operating capital to meet the revised figures by the end of the year. In an interview with Joy Business at the sidelines of the 10th graduation ceremony of the Ghana Insurance College in Accra, Commissioner of the National Insurance Commission, Larry Bauer, disclosed that the recapitalization process ended last year, with one firm yet to meet the new requirement.
It ended in 2016, and all the companies have met the minimum, capital requirement, except for one company. We are encouraging it to still, if they don't, we're giving them up to mid-year 2017. If they don't, then we'll take remedial action. We have mechanisms in place to take care of the policyholders.
The ceremony was also attended by key insurance stakeholders and managers of the various insurance institutions in the country. Some of the graduates shared their thoughts with Joy Business.
The insurance industry, most people are not embracing it because I think the college or the insurance body need to really make a lot of awareness so that people will really appreciate what they are buying insurance for.
This is not the first insurance course I've undertaken. I've gone to the West African Insurance Institute in the Gambia. But comparing that to the Ghana Insurance College, I can say that Ghana Insurance College is outstanding when it comes to the insurance courses or professionalism.
The college was established to train professionals in the sector and to help improve insurance services in the country.
Expert to tell us more about the new minimum capital requirement for the industry and its impact on insurance operations in the country. And we're joined by Edgar Redu. He's an insurance expert. He joins us on the line. Good afternoon, sir. Welcome to the marketplace.
Good afternoon.
All right, so what do you make of the new minimum capital requirement for the insurance company? Is it a necessary factor at all, and how would it impact operations of the insurance industry?
Well, I must say that there is nothing like a minimum requirement. The minimum requirement is actually the equivalent of $1 million. But what the National Insurance Commission has done is that it has evaluated the processes, the nature of the businesses that the insurance industry is getting themselves into now, and have decided to increase the minimum capital to an amount of 15 million Ghana cedis.
Now, 15 million Ghana cedis for insurance, each insurance company to pay. Do you think that it's adequate enough, or it's too much for the industry?
Oh, well, considering the nature of our currency and looking at the way our economy is, I think the 15 million is just a reasonable figure. The whole essence of it is to just make sure that because we continue to insure or underwrite some kind of huge risk, there's a need for the insurance industry, that is the insurance companies themselves, to be in the financial position to underwrite this kind of risk, so that it does not put us in a situation where we have to virtually reinsure everything that we have. That means some level of capital flight, always trying to do some reinsurance going outside the country. So to that extent, it does not make the industry itself strong. So raising the capital makes it such that, yes, as time goes on, we shall be in the position to retain a lot of the businesses that we underwrite in. That is helping to make the company strong. And to that extent, the capital flight would also be reduced.
Okay. Now, in a country where insurance penetration is said to be still low, is this high, is this new capital requirement not going to impact negatively on new or prospective insurance policy holders?
Not at all. You see, I've always had a difficulty with understanding that particular statement. I hear it every time, that people say that the insurance penetration is low. Are we suggesting that we should increase the premium so that it will become higher or what? That is not. You see, you have to look at the economy as a whole. What is the, the population size like? What is the kind of products that are out there for the people to, really be part of? In talking about negativity, no, it will never be negative. That is rather going to strengthen the industry, because it will hitherto, you were virtually reinsuring everything that you have. So a lot of money was not being kept in the system, for which other people can also use it to play around. But with this capital, as it is raised, it means that you are building a solid backbone. And in building the solid backbone, you can retain more than previously you were doing. So naturally, it's not a negative effect to the industry at all, or to the insuring public. And that has nothing to do with the premiums that the individual or the corporate is going to pay.
Let's shift attention a little bit to the oil and gas industry, where the capital or the risks associated are really, really huge. And for that matter, there have been concerns that local insurance companies alone may not be able to handle such huge risks associated with this industry. What are the measures, or is this one of the measures that could help, to bear the risk of the oil and gas industry?
You have answered the question, and then you've come back to the point I was raising. Yes, initially when we started it, right, an amount of about $23 million that was paid into the country, we could only retain $500,000. I think it was about 24 million or 23 million, one of them. We could only retain about $500,000 of it. All the others have to go out of the country because we don't have the capacity. So these are some of the measures that are being put in place. So to the extent that we are able to build the capacity, the next time round, we would not be throwing away $23 million, but maybe we'll take away maybe $10 million out. And gradually, we shall be able to retain everything for ourselves.
Do you think
you have answered the question rightly?
Do you think it's time for some insurance companies to begin merging and to be able to create a wider base for such risks, huge risks?
Well, unfortunately, the Ghanaian businessman sees things differently. Ghanaians don't believe in mergers. Ghanaians are the self-type people. We want to own everything for ourselves. So when you talk about mergers, it's a big problem in Ghana. But under normal circumstances, mergers should not have been a difficulty at all. But, if you look at the normal Ghanaian man, the sentimental values attached to this is my company, I built it, and that sort of attitude, it may take a while before we can get to that level. It may take a while before we can get to that level. Under normal circumstances, I don't think mergers should be a problem at all.
So finally, before you go, what is the way forward for the insurance sector in the country?
Oh, Well, I think the only problem I have currently is the fact that the commission has done some one or two good things. All the things that they are doing is quite good, but unfortunately, they are flouting the laws. The laws does not give them that powers to be doing what they are doing. They need an LI to give them the power to do what they're doing. I would appreciate it if they will find it very necessary to, really get the LI in place. So then it means whatever they're doing is backed by law. Even though what they're doing currently is good, it is not backed by law. And that is my only problem that I have with them. So I think that they should rather, push for the LI to be in place so that they will get the backing of the law. Or else whatever they are doing is arbitrary. And someone can even take them to court on that issue.
All right, many thanks for your time, Mr. Edgar Redu. Edgar Redu is an insurance expert. He's been sharing some thoughts on the new capital requirement for the insurance industry. It's on the marketplace, and the managing director of Melon Concepts, Charles Agyemang-Badu, has emphasized the trending role of social media in marketing products and services by SME businesses in a competitive business environment. He was speaking with Joy Business after the opening of the maiden edition of the Selewa African Market at the Golden Tulip Hotel here in Accra. The event assembled many SMEs which operate in Accra and some other parts of the country to exhibit their locally manufactured goods.
The Selewa African Market platform provided opportunities for small-scale and medium enterprises to exhibit their products to customers who were expected to patronize the Golden Tulip Hotel for the May Day holiday celebration. According to the managing director of Melon Concepts, Charles Agyemang-Badu, using social media to capture targeted groups of people for business development is the new way of promoting brands. He said majority of Ghanaian SMEs are yet to take advantage of the opportunities provided by social media networks.
With the advent of internet and social media, there's a whole lot of business going on in social media, which is mainly small to medium scale. So I classify them as SMEs. About 80 to 70% of the vendors you see here, they don't have a physical presence. All the business they're doing is purely on social media. So when you give them a platform like this, there's an avenue for them to meet face-to-face with the customers they've been buying from, and it builds customer or shopper confidence. And they are able to also expose their brand to other shoppers.
Some participants who defied the afternoon downpour to display their products also shared their thoughts with Joy Business.
We're making sales. It's raining, but we still have people standing in the rain and trying to buy the stuff. So it's good.
How do you describe such a platform in Ghana?
Well, I think it's a great platform. The fact that we are actually concentrating on made in Ghana goods, it's a great idea, because you see a lot of the young people in Ghana, even some of our older folks, who are more interested in things that are coming from abroad. So it's really great when you have a platform that is showcasing the products that we make for us and for the rest of the world.
I believe that the market and the target audience here is different from what we're usually used to, which is different locations like Leases Complex and other places that we've done, the Selewa Market. But I believe this is different totally, so that even guests that come to the Golden Tulip can get the chance to also shop at the African markets when they're here, get gifts for their friends and family. So it's a great initiative.
It brings together people from all walks of life. We've met amazing people here today. We even met people who are ready to order stuff from us, and we're really grateful. I mean, this doesn't happen often. Most of the time with these markets, you don't find a variety of people, but the Selewa Market really provides people from all walks of life.
What are your expectations at the end of the day?
Oh, to sell every single item here today, and to network and make new acquaintances, new clients, new partnerships here.
Here at the Golden Tulip Hotel in Accra, where the Selewa Market is going on, hundreds of people have defied the rain to actually come here and display their products, ranging from African arts to painting, clothing, and African music. It is one of the opportunities offered by organizers of this event to have SMEs, Ghanaian SMEs, display their products for people who come in at the Golden Tulip Hotel to have a feel of African arts and African products. This is the first time such an event is happening here, and many more are coming in to display their products. From the Selewa Market at the Golden Tulip Hotel, I'm Ebenezer Sabuti.
Now, government's decision to clear all the energy sector debts than earlier projected has been welcomed by institutions that the state actually owes. The Vice President last month announced it's working to issue a 15-year bond as part of several measures already implemented to clear the debts. Now, George Wiafe has been assessing this particular development and has joined me right here in the studio to tell us more of this development. George, you're welcome.
Thank you so much.
Now, so far, how much of this debt has been cleared in the first place, and how much is left to pay?
Some of these debts are being categorized, and let's just first start with the bit on the VRA debt, and that is what they are using the ESLA debts to clear. And you could say as far back as February, it been cleared almost about 400 million Ghana cedis. When you also look at the BDC debts, we understand a little over 1 billion Ghana cedis has been cleared. But if you do your analysis or you engage people in the industry, we understand that this debt is hitting over 10 billion Ghana cedis. So what has been cleared so far is just might be a drop in the ocean or a little fraction of the entire debts that one can talk about with respect to the energy sector debts.
Now, so you have been engaging, captains of industry, you've also been engaging experts in the economy. Now, what have they been saying with this approach?
Well, let's start first with the BDCs, and these are the companies that import these petroleum products onto the market. And we understand that they are being owed a little over $2 billion or so. So for them, they think that it's in the right direction. It's been long overdue, and any initiative that will go a long way to reduce their debt position is to welcome. The oil marketing companies also, this debt also affect them indirectly, and they're also saying that it's a good thing because most of them were even going down. And therefore, even the plan, the announcement itself, will revive some confidence in the industry. Therefore, they can walk into the commercial banks and ask the banks to open fresh credit for them. So that's a good one. Now, the banks themselves, we spoke to the managing director of Ecobank, and he also thought that it was in the right direction because for them having this huge debts on their books, a real problem for them. And going forward, they're struggling even to stay in business, even as the bank itself, and even extend fresh credit to businesses. You talk about the fact that non-performing loans are going up. Debts that the banks fear might go bad, they are going up. And therefore, if you should walk into a commercial bank, you've been asked to pay more for that credit because some other institutions like these BDCs and these OMCs and even government, it is delaying in paying these debts on time. So that is how critical any arrangement to totally clear all these debts have on the entire economy.
Now, so how much are we looking at raising to clear all these debts?
I said now it's still not being finalized, but we understand that the various instruments have gone very far, and very, very soon it will be announced to the public on the timelines and how much they're looking at raising, because it's more of a commitment. Government is going to issue more, tell investors out there, locally or foreign, that give me X amount of money, it's going to be used to clear this amount of debt, and I promise to pay X amount of time. Therefore, you're going to stagger the payment. And government having a good credibility and even guarantee can use that to raise the money from investors and use it to clear these debts. Even the commitment alone, some might say, it is good for the industry.
Now, certainly to have an impact on cost of credit, which, what are we looking at here?
Well, we have any time you walk into a commercial bank and you ask Bank A to extend credit to you, a lot of things go into it. The cost of that credit, the economy, inflation, and also the fact that most of these debts are not being paid on time is priced into that debt. So if these bad debts are going to reduce going forward, are going to go down, then when you walk into that bank and they are pricing that loan, obviously you have a better advantage of getting it at a lower rate than what you have thought. And therefore, if indeed that is going to reduce the debt position of these banks, obviously the broader economy in terms of debts and how much you pay for that credit, it will go down your feet. That is what we are being told from the analysis, and whichever way you want to look at this thing because of the impact on the broader economy.
All right, so I think it's a necessary evil that we should all embrace and declare it finally. But what do we know, or how sure are we that it will not recur? Because these things, happen.
Well, I think that you look at the ESLA or the energy sector the program that has been put in place, and it's more of a more structured way that going forward it would clear the books. But again, if you also engage the energy companies, we've got the understanding that the structures are being put in place because both the previous administration and the current administration are all working to ensure that we don't get this position again. So it looks like if they are able to address everything, we won't have this huge debts building up, because one of the main reasons for these debts were the subsidies that was extended to the sector and were not paid on time. And government had decided that through the IMF program, decided to stop this whole subsidy program. So it looks like we may not get there, or we might not get there.
I believe rationalizing the downstream energy sector is a key.
Well, that is what those in the industry will always say that's critical for the economy.
Thank you very much.
Thank you
George,
so much, Yafe.
Time. And that was George Yafe bringing us up to speed with the decision by government to clear the entire energy sector debt off the books of the commercial banks and the country as a whole. And that's it for the marketplace for today. Many thanks for watching. My name is Emmanuel Abuaji. You have to join me again same time tomorrow for other interesting developments in the world of business. Have a great afternoon.